Hello, and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host, Daniel, bringing you the highlights and the happenings from around the world. The first week of March started with a bang, as markets digested fresh economic data, central bank rhetoric, and some eye-catching corporate moves. Investors are grappling with the delicate balance between economic resilience and sticky inflation, while AI-driven optimism continues to propel tech stocks. Meanwhile, China's markets remain sluggish, despite policy support, and European equities are feeling the weight of weaker growth signals. Let's dive into the details. US stocks continued their upward march, led by AI-fueled tech gains. Nvidia, plus 7% on the week, hit another all-time high as Wall Street scrambled to keep up with demand for its cutting-edge chips. Meanwhile, the broader market was pulled in two directions. Resilient economic data fueled optimism, but persistent inflation raised concerns about the Fed's next move. The core PCE price index, the Fed's preferred inflation gauge, came in at 2.8% year-over-year, slightly above expectations. While this isn't a disaster, it keeps rate cut timing uncertain. February's consumer confidence data surprised to the upside, signaling that households remain upbeat despite higher borrowing costs. A chorus of Fed officials reinforced their data-dependent stance, with Chair Powell reiterating that rate cuts are unlikely before mid-year. European equities underperformed as weaker economic data weighed on sentiment. The Eurozone's February inflation report showed a slight cooldown, 2.6% year-over-year from 2.8%. But growth concerns are intensifying. Meanwhile, UK markets struggled as sticky inflation dimmed hopes for early Bank of England rate cuts. The latest CPI print showed inflation holding at 4.0%, well above the BOE's 2% target. The German economy shrank by 0.3% in Q4 2024, confirming a mild recession. With industrial activity still sluggish, hopes for a quick rebound are fading. While inflation is easing, ECB policymakers remain cautious about premature rate cuts. Markets are now pricing in a June rate cut, but officials are not committing just yet. BOE Governor Andrew Bailey stated that inflation risks remain, pushing back on speculation of rate cuts before summer. Despite high inflation, UK retail sales rebounded in February, suggesting consumer spending remains solid. After a red-hot rally in February, Japanese stocks cooled slightly as profit-taking set in. However, the broader uptrend remains intact, supported by strong corporate earnings and foreign investor inflows. The yen remains near multi-decade lows, boosting Japan's export-heavy stocks, but keeping pressure on the Bank of Japan, BOJ, to eventually shift policy. With inflation staying above 2%, expectations for a BOJ policy tweak in the coming months are rising. Chinese equities remain in the doldrums despite continued government stimulus efforts. Investors remain cautious about weak property sector data and lackluster economic momentum. The latest manufacturing PMI slipped back into contraction territory, 49.6, raising concerns about China's recovery. Another major developer, Country Garden, missed a debt payment, reigniting fears of sector instability. The services sector has been a key driver of economic resilience. If it stays strong, it could delay Fed rate cuts. A strong jobs report could reinforce the Fed's patience on rate cuts, while weakness might shift expectations. While no rate cut is expected, the ECB's tone on inflation and growth will guide expectations for a potential June move. Any revisions to growth data could influence the Bank of Japan's policy stance as it inches toward ending negative rates. Investors will watch for potential new stimulus measures as Beijing tries to stabilize growth. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.